Hi everyone, welcome to Real Estate Tax Tips YouTube channel. My name is Cherry Chen, a real estate accountant in Ontario, Canada. Today, we are going to talk about the cost of transferring your rental properties to a corporation. Are you a real estate investor who owns multiple rental properties? How do you own your rental properties? Do you own them personally or do you own them in a corporation? If you own your rental portfolio in your personal name, have you ever wondered the cost associated with transferring your properties to the corporation? Did you know that there are 4 major costs that you would incur if you decide to transfer your property to the corporation? These 4 costs include 1. Land transfer tax, 2. Capital gain tax, 3. Professional fees, and 4. Mortgage penalty. These costs can add up quickly, and they may be a deal breaker if you are considering transferring any of your properties to a corporation. Today, we are going to dive deep into each of these costs to help you make an informed decision. Before I dive into the discussion, make sure you subscribe to our YouTube channel to stay on top of the latest Canadian tax tip. If you like our video, make sure you give us a thumbs up and comment below. Now, let's get started. Many real estate investors ask if they should set up a corporation to own their investment portfolio. This is almost the number 1 question our accounting firm gets asked. Should I incorporate or not? There are pros and cons in terms of owning your rental investment in the corporation. I just spent an hour and a half on a webinar sharing all the criteria we look at when making the incorporation decision. It is definitely not an easy subject to attack in a YouTube video. If you're not sure the pros and cons of owning real estate in a corporation, please visit our website at realestatetextips.ca to download the free report, and it will be a good place to start. Now, assuming that you've already decided to transfer some rental properties to a corporation, what are the costs involved in transferring these properties? Number 1, land transfer tax. When you decide to transfer your rental properties into a corporation, in the eyes of law, you are considered selling the rental properties to the corporation at current market price. In Ontario, many provinces in Canada, you're required to pay the land transfer tax calculated at the current market price. Let's use an example to illustrate. When you purchased your rental property in 2015 for $500,000, at closing, you would have paid land transfer tax in 2015 for $6,475. Assuming that your property isn't located in Toronto, in 2021, the property is worth $800,000. You decided it is time to transfer the property to a corporation. You will be required to pay land transfer tax upon the transfer for $12,475. And this is calculated based on the fair market value of the property at the time of transfer. If your property is located in Toronto, the land transfer tax will be double. Some investor client asked, are there any way to avoid the land transfer tax? In certain specific situations, investors may be able to avoid the land transfer tax if they always own their properties in trust for the corporation. This is a topic for another YouTube video. Number 2, capital gain tax. When you transfer a property to a corporation, in the eyes of law, you're considered selling it at fair market value. Fortunately, CRA allows you to sell your property on a tax-deferred basis to your corporation with certain conditions. This means that you can potentially not pay capital gain tax and recapture tax on the transfer of your property if you choose to defer the taxes. Let's use the same example to illustrate. Continuing on with the same example from before, you purchased a property in 2015 for $500,000. You incur land transfer tax and other closing costs for $6,475 and $1,525 respectively. The adjusted cost base of the property is now $508,000. In 2021, you decide to transfer the property to a corporation, and the property is valued at $800,000. If you choose not to file an election and opted to pay for the capital gain tax on the transfer, you will report a capital gain of $292,000. 50% of the $292,000 is taxable, so $146,000. Assuming your marginal tax rate is 50%, you can pay as much as $73,000. But you may also be able to qualify to defer this capital gain tax on the transfer with a proper election form filed. A word of caution though, it is important to have a proper discussion with qualified real estate accountants about this election. Even though the election is available, it does not necessarily mean that it's beneficial for you to do so. This is especially true for investors who have refinanced their properties multiple times or who have claimed substantial amounts of capital cost allowance on the property in the past. Number 3, professional fees. If you choose to defer your capital gain tax, a special election form has to be filed with CRA. You will likely engage a tax accountant to file the form for you. The purchase and sale agreement between you and your corporation is also different from the traditional agreement that you typically use. You will also engage a real estate lawyer to assist you from that respect. You will also need your lawyer to transfer the title officially with the Land Registry Office. Depending on your mortgage plans, you might have to also pay your lawyer to do refinancing for you. At the same time, you might also have to pay for title insurance. Number 4, mortgage penalty. Mortgage penalty is less discussed and often overlooked cost of transferring properties to a corporation. When I refinanced my 3 rental properties in the corporation's name, I incurred about $15,000 mortgage penalty. If you're refinancing your property and moving your property to the corporation at the same time, you cannot overlook this mortgage penalty cost, especially for those of you who committed to fixed interest rate mortgage. Thank you so much for watching. If you have any questions, make sure you ask them in the comment section below and I will personally get back to you. If you like what you have seen so far, make sure you like the video and subscribe to our YouTube channel to stay on top of the latest Canadian tax tips. Thank you for watching and have a fantastic day.